Welcome to a presentation of Silver Fern Homes Luxury Home Index. My name is Osman Parvez, and I'm a co-founder of Silver Fern. I'll be your guide through this presentation. As you may already know, each month we produce the Silver Fern Report, an analysis of Boulder's real estate market. It's a look at the overall market, which includes everything from rental houses on busy streets to luxury multi-million-dollar estates. The quarterly indexes, like the one I'll talk about in this presentation, are an attempt to provide more detailed information on specific market segments. Silver Fern provides two indexes for Boulder. One is the Basic House Index, the other a Luxury Index. And just in case you're not familiar with indexes, the concept is to sift through market data and pull out a basket of relevant samples. Because indexes select for specific characteristics, they provide a much more focused view of a particular market segment. You'll find indexes are commonly used in the capital markets, including the Dow Jones Industrial Average and the S&P 500. In recent years, the Case-Shiller Home Price Index has also become popular for tracking real estate. Before we jump to the index, here's a few seconds to read the required legalese. Okay, I'll start off by talking about the background of the index, why we put it together, and how it's constructed. Then we'll launch into the key indicators, starting with price trends, then days on market, moving to negotiated discounts and so forth, until we reach a distribution analysis on sales and inventory. I'll end the presentation with a few thoughts for how we might improve this analysis going forward. You might be wondering why we put so much effort into analyzing Boulder's market. The answer is we saw an opportunity to use our expertise to better advise our clients. After all, real estate is typically the largest investment people make, and getting good information is critical to making an intelligent decision. Taking the time to develop market analyses like this one is also in line with our philosophy of acting like advisors, not salespeople. There are three things we try to do better than the typical agent: provide market expertise, advise our clients on negotiation strategies that will help them get a better deal, and always seek ways to add more value. This analysis falls under the category of providing market expertise. It's designed to help you better understand market conditions for luxury property in Boulder. And knowledge of market conditions, when used appropriately, can save you money, save you time, add significant leverage to your negotiation, and reduce stress because it removes the guesswork. Alright, so let's talk about what's in the index. The Luxury Home Index covers property that has 3 to 6 bedrooms, 2 to 6 bathrooms, and are sized between 3,000 and 6,000 total square feet. This lens removes super large mansion type estates and tiny but expensive historical homes. When I started the index in 2007, I also put in place a price floor of $1 million. Since real estate generally moves at the pace of inflation, I adjusted the floor by the Consumer Price Index, or CPI. Naturally, there's some pros and cons to this approach, and I'll touch more on that at the end of this presentation. So, with that said, let's go to the charts. The first chart is an annual look at prices in the index. Here you can see what qualifying properties sold for from 1997 through the last 12 months. Prices in the index have been fairly flat since 2007, as you can see. Now let's zoom in and look at a quarterly snapshot. Here you can see that prices have dropped a touch in the third quarter. That's the red circle. However, if you look back, you'll see that it's not uncommon to see a drop in the third quarter of every year, and the drop wasn't really notably more than variation you'll see between other quarters. Also keep in mind that prices reflect what's sold. So if more lower price properties sell in any given quarter, the index falls. If more higher price properties sell, the index rises. Movements in the index are not saying that the market as a whole has risen or fallen in value. But with that said, there's no doubt that in the latest quarter, if not the latest several quarters, properties in the luxury index have been falling in value. Okay, so let's go to days on market. First, the annual view. Here you can see the days on market has been rising, with the last 12 months setting a new record. You'll notice a similar pattern exists after the dot-com collapse of 2001. Today, we're in excess of the highest days on market from that period. Looking at a quarterly basis, you can see that the peak was the third quarter of 2008. The latest quarter, which is the red circle, is actually somewhat below that peak. Let's talk about negotiated discounts. In this chart, you can see that there was a similar period of high discounts in 2002 and 2003. You can see negotiated discounts on luxury properties started rising again in 2006. And the last 12 months set a new record with the median discount over 6 I suspect when 2009's over, we'll have set a new full-year record. On a quarterly basis, discounts were even higher in the second quarter of 2009, approaching an unprecedented 9%. Now let's look at sales volume. For property that meet the characteristics of the index, volume rose from 1998 to 2006, almost a full decade, but it's been falling since that peak. And during the last 12 months, sales volume is roughly on par with 2003. Let's look at sales volume on a quarterly basis. The precipitous decline is evident here as well, and the bottom appears to have been the first quarter of 2009, when fewer than 8 properties sold. The next slide graphically depicts absorption. The black bar shows current inventory levels for the index, and here you can see 89 homes were on the market. The green bar is what sold over the last 6 months, fewer than 50 properties. And meanwhile, the number of withdrawn or expired listings have ballooned to over 150 in the last 12 months. And you can think of withdrawn and expired listings as a measure of seller frustration. And here you see that withdrawn and expired listings are more than 3 times the level of sales in the same period. Undoubtedly, there are a lot of frustrated sellers. This next slide is the last slide in the series. And here you can see inventory and sales volume distributed within the index. The red bars represent current inventory. The green are what's sold over the last 12 months. And at the low end of the index, that's $1 million to $1.5 million, you can see that sales volume is almost on par with current inventory levels. At price points higher above that $1.5 million level, the situation changes remarkably. The sales volume to current inventory ratio is much more erratic, with sales generally representing a much smaller percentage of current inventory. In plain English, if you're selling at price points above $1.5 million, you're going to have a lot more competition and have to justify your value much more clearly than at price points at the lower level of the index. If you're buying a luxury property in Boulder, you already have quite a bit of negotiating leverage, but at price points above $1.5 million, your negotiation leverage is substantially higher. So where do we go from here? Well, if you're a buyer, the ball's in your court. Handled professionally by an agent with significant negotiation experience and a desire to help you get the best deal, you should benefit. If you're a seller, you have to present compelling value to buyers. And you have to touch on the emotional elements that will complete the sale. You have to, in essence, appeal to both heart and head. A very detailed and careful analysis by your agent can show you the price trend for your house. Ultimately, you need to lead the trend, not follow it down. When your listing sits on the market, it has a negative effect on buyer psychology. They want to know what's wrong with it. The future of the market in general is also quite murky. The home buyer tax credit has certainly motivated some buyers to move, but most Boulder buyers at these price points are going to be on very solid footing financially, and that $8,000 or potentially $6,500 credit isn't really enough to compel them to come out and purchase your property. One thing to keep in mind, as the US dollar continues to slide downward, more investors are likely to be considering hard assets as places to park their wealth while currency markets stabilize. As an advisor once told me, it's easier to pay down a mortgage during a period of high inflation and rising wages. Okay, so let's talk about potential areas for improvement. The index uses a price floor of $1 million as a characteristic for inclusion. The idea was that price is a good proxy for luxury. The $1 million floor was adjusted by CPI, with 2007 being the base year. However, in 2008 and 2009, prices have been falling despite increasing CPI. So if I kept the price floor at $1 million, there would have been 5 more properties in 2008 and 7 more this year. That's a total of 12 properties that may have been worth including. For now, I'm going to leave the CPI adjusted floor in place. Prices will once again rise at some point, and adjusting the floor for a relatively short period of declining prices seems short-sighted. I'm still open to the idea, though, and time will tell. And that brings us to the end of this analysis. If you liked this presentation, you can sign up to receive the monthly Silver Fern Report, plus the quarterly indexes on our website. Don't forget, our business is helping buyers and sellers make smarter decisions. So if you're thinking about buying or selling a house in Boulder, please consider Silver Fern Homes. We want to be your realtor. Choosing Silver Fern Homes also means you're supporting the local nonprofit community. Through our industry-leading Pay It Forward program, we donate 5% of every commission we earn to local nonprofits. If you'd like to contact me directly, you can reach me at osman@silverfernhomes.com. You can also visit our website at silverfernhomes.com or call me directly at 720-310-5007.